What saved the IMF from just being folded up and going home was the financial crisis. Foreign other countries aren't very interested in giving money, except those in the European and U.S. orbit. Remember, they just had a very contested vote over who was going to be the next head of the World Bank. And for the first time, it wasn't a representative of the U.S. Pentagon and the U.S. military establishment, but it was the U.S. candidate. And you had criticisms from the third world countries saying, wait a minute, why do we want to be the major contributors when we have such a tiny voting right? And it's the debtors, like the United States and Europe, who have the voting rights and not us. So I don't think they're going to be very interested in the IMF philosophy, especially when the IMF wants to impose on Europe really the same kind of austerity programs that it imposed on Latin America, Africa, and Asia and Turkey from the 1960s on through the early 2000s. So other countries, except for Europe, have rejected the kind of austerity programs that the IMF is selling. And I don't think there's going to be much impact of the meetings in Washington at all, except the usual self-congratulatory austerity is good propaganda. 1,000 years ago, it took an army to grab land and infrastructure and take over the government. And today, without an army, without force, the European Central Bank and the European Union is being able to grab the land of debtor countries, Greece, Spain, Portugal, Ireland, and to impose tribute without any military force at all, just by trying to convince the people that, as Margaret Thatcher said, there is no alternative. And to make sure there's no alternative, there's no discussion of actual alternatives. Of course, there are many alternatives, really.
Of course, I want to get into those. You're talking about financial warfare, which really does seem to be the name of the game and the direction that things have gone in. But while we're on the technocrats that have been installed to push through some of these reforms, it doesn't even seem like they're able to do it. Mario Monti in Italy is set to miss a budget target. Italy's delayed by 1 year its plan to reach a balanced budget in 2013, according to Reuters. And the Portugal Prime Minister has written that the country can't definitively promise that it will meet its targets to return to capital markets before September of 2013. So is the problem these countries, or is the problem these targets that seem ridiculous?
It would be a disaster to balance the budget. When a government runs a budget deficit, as the United States does, it creates money to pump into the economy, and running a government budget deficit is the only way to pull Europe's economies out of the depression and the lost generation that they're falling into. You mentioned unemployment in Spain. The unemployment among young adults is 50%. And the average unemployment is 23%. It's 23% also in Portugal. This is a disaster. We have reached a point now where democracy is incompatible with the world's debt structure. And so the creditor position has forced a transition from democracy to oligarchy. And what's emerging is, as the Wall Street, Occupy Wall Street people say, the 1% against the 99%. And they are willing to push the economy into depression if they have to take 1 penny loss on what they have. They say all of the loss on our private claims, our holdings of government bonds, all the loss has to be absorbed by the taxpayers. We, the 1%, cannot take any loss at all. You have to do what Ireland did and force your economy into a loss generation, into a depression in order to pay us. And it's amazing how they're actually able to convince populations to do it. And when they can't convince the population to say it's time to end democracy, there is no alternative, put in our representatives and let us squeeze out as much as they can. They're using Greece as a test case. They say no country, no matter how small, can stand up to us. Remember, creditors are bullies. It's like the United States versus Afghanistan, or really like the United States versus Grenada. They want to make sure that no one will emulate Greece. Iceland was bad enough, so they're using Greece as an object lesson because their worry was that if Greece doesn't pay its debts, then Ireland won't pay, Spain won't pay, Portugal won't pay, and all of a sudden you have democracy. and that would mean curtains for the debt system.
Well, on the note of Iceland, Iceland did different things when it handled its crisis, very markedly different. It refused to pump money into failed banks. It required debt write-downs in situations where mortgage debt was too high for borrowers at a certain extent. And I'm sorry?
I'm afraid you're wrong there. Iceland has made some very bad errors. The situation in Iceland is much worse than it is in any other country of the world, because in Iceland alone, its debts are indexed to the consumer price index, which means to the price of imports. So if you borrowed, say, $100,000 on a house, you now owe about $180,000 because of the indexing for mortgage. Iceland's banks were bought out by vulture banks that have not written down the debts as they were supposed to do. Iceland is still a disaster area.
What about reports that Iceland is now paying its IMF loans early? Unemployment is down, growth is above average. There is a program to write off a portion of mortgage debt to 110% of households' pledgeable assets. Are you saying that these things don't matter in the big picture? Is that what's being missed?
There's still massive foreclosures there, and the mortgage debt has gone up so high that it's absorbing the household assets to such a point that 10% of Iceland's population, 30,000 people, have had to emigrate to Norway alone. So unemployment is spreading. What the president of Iceland did say was that there was a silver lining to the bank crisis, and that was that the banks in Iceland had been employing all the best mathematicians and the best minds to do casino capitalism, gambling. And once the banks went under, all of a sudden, all of these good mathematicians became available for the computer industry, for high technology industry. And so Iceland's high technology industry, depending on mathematicians and high skilled people, all have really taken off. So that sector indeed has taken off. But the Icelandic mortgage debt situation is still very bad. Iceland has repaid its IMF loan because it wants the IMF to get out of there forever. It just wants to get rid of them so that it doesn't have any control over the Icelandic policy, because the IMF has consistently misrepresented the statistics of Iceland. Its forecasts have been abysmally wrong. It's been an embarrassment for the IMF, and they've literally run away with their tails between their legs.
Here, with my little bag, to actually collect a bit of money.